You've been CEO for a bit over 3 years now. Over that time, has it been easier or harder to do business in both Australia and the United States?
Well, that's a bit of a loaded question. Look, I think the gas industry has gone through a pretty tough time here in Australia, between regulatory changes, court cases, protesters. We've had a bit of a tough patch. I think people are starting to come to a realization, though, that for Australia to have a prosperous future, that prosperous future needs gas. And whilst we all want to decarbonize and we all want more renewables, we've got to figure out some way to get emissions down, as well as keeping the lights on, and gas is going to be part of that solution. So it feels like things are in a little bit better place now than they were maybe a year ago, but I'm not going to bank my wins yet.
And then looking at the States, there's obviously the election coming up in a few months' time. Is there going to be any impact on your business potentially, depending on who wins?
We're watching the policy positions of both parties really closely to understand what they might do. The Republicans, of course, have a very pro-oil and gas mindset. But if you look at the facts, you would see that oil and gas production in the U.S. grew more under Biden than it did under the first Trump administration. So at the end of the day, a lot of our ability to do our business comes down to states and comes down to some of the continuity at the highest level in policy. So we feel pretty good about our ability to continue to do our work in the U.S., but we'll all be watching the election closely.
And then just looking globally, China's economy still spluttering a bit, still a war in Ukraine. I mean, how much geopolitical risk is there still for you right now out there?
Yeah, look, it's something we watch very closely because it's something that affects all businesses. China's economic situation is incredibly important to most Australian companies. They're a very important energy consumer, so what China does affects the price of our commodities. But then again, there's other externalities, things like war in the Middle East, war in the Ukraine, that also have significant effects on energy prices. So we watch all of these things very closely. At the end of the day, we control what we can control, which is making sure we're running our business safely, reliably, cost efficiently, and delivering on our investment programs.
And then inflation, it's been persistent for quite a few years now. Are you finally starting to see those pressures easing off?
I'm really pleased with how our team has managed those pressures. And if you look at our half-year results, one of the highlights is the fact that our unit production cost, half on half of last year, is down. And that's a testament to everybody in our business who is working hard every day to figure out how can I do my work more efficiently, how can I make sure that every dollar I spend is a dollar spent wisely. So I feel really good with how we've managed the inflationary pressures, but it's a constant battle.
Yeah, looking at your results, average realised prices down about 11%, production down slightly. Is that really the main reason for the fall in profit?
Yes. Our profit tracks commodity prices, so if we get less for the products we sell, then that has an immediate flow through to profit.
What's the outlook then for looking at prices potentially over the next 12, 24 months? Are things looking a bit better?
Look, as we look at natural gas prices, particularly for LNG, things are looking pretty positive. We're seeing Asian LNG prices looking pretty strong for the forward period. But again, it's something where a change in geopolitics or a change in China's economy or a change in the U.S. economy can have a ripple effect. So, we try not to get too complacent with the forward curves.
And then looking across the world, where are your biggest competitors located?
Look, we closely watch what's happening in the U.S., particularly in the LNG market. Right now, the world has 3 main LNG producers: the U.S., Qatar, and Australia. And the U.S. and Qatar continue to invest in growth, and that growth will be hitting the market in the next few years. So those are the parts of the world that we watch closely.
You've dropped your interest in Santos earlier this year, but do you feel like you need to be a bigger company to be competitive on the global stage?
Part of why we made the announced acquisition of Tellurian and the Driftwood LNG is that opportunity to continue to grow our LNG portfolio. So there's a lot of different ways to grow. With Tellurian, we've got a pretty affordable acquisition that gives us the potential to build up to 27.6 million tons per annum of LNG. And just for calibration, That's the size of Northwest Shelf plus Pluto, plus the second train we're building at Pluto. So it's a very significant opportunity there, and that'll give us the growth that we're seeking in our LNG business.
We are seeing a lot of consolidation around the world. Do you think you're open to a potential takeover with someone tapping you?
Look, I think Woodside as a standalone company is a very attractive investment proposition. I think we're a very strong company as it stands today, and our goal is to continue to thrive as a standalone business.
We've seen speculation about Chevron potentially interested. You obviously work together on quite a few areas in Western Australia. Is there any sort of truth in that?
Look, I think it must have been a slow news day to revive some rumors that have been floating around for a while. Look, we've got close relationships with a number of other companies in our sector, and as I said, our goal is to thrive as a standalone business.
The last 6 months, this half year, you've progressed quite a few projects. Sangomar now producing oil. Just explain the significance of that.
Sangomar is really exciting because it's Senegal's first oil and gas development. It's a deepwater field. Was discovered less than a decade ago. So very pleased with Woodside's ability to develop the asset. We built the project during COVID, so our employees had to go through all sorts of challenges around overseeing and managing construction, which was global construction in China, in Europe, and then, of course, field execution in Africa. So really pleased with the work the team's done to be able to bring that project online. And we've started up smoothly. So often when you start up a new asset, sometimes you've got some bumps and setbacks. Really pleased we've hit nameplate capacity of 100,000 barrels of oil per day already in our first month.
Meg O'Neill, Chief Executive at Woodside, thanks for your time.
Thank you.